explore an example on this. One other thing is spreading risk. Now, this might sound like a secondary thing or something which actually comes from the first one itself, but it's fairly significant. Let's say you have a $15 million company, fine. And something happens maybe with the economy or your company. And what ends up happening is your company goes into loss and now it's just worth $1 million. And let's say the entire money is your money. You basically lost $14 million because of these problems, fine, which is fairly problematic. So whatever money you lose, you are the only one standing to lose things. The entire risk of the capital is your own. Whereas when you divide your company's ownership into a bunch of different people, you're just not the only one holding the risk. It's divided as well. Now, coming for
You are
You are
muted.
not audible.
You are mute.
okay. Can you hear me now?
And yes, can you make others the participants
Yep.
attendees?
Shri Krishna, Shashwat, please do that. Make others attendees. Sorry for the inconvenience, guys. Is my screen visible?
Yeah.
Yes.
Yeah.
Yep. If I'm muted, if I'm muted before all the others become attendees, please tell me once. I think we should continue. Did you guys catch the point I just made about risk?
Yes.
Yep. Okay.
Yes.
So the risk is spread. After that, the next point is going to make is providing an early exit for providing an exit for the early investors. Most of the businesses, what happens is at the start they can't actually raise funds using an IPO. So they go to these class of investors called angel investors and ask for money to basically jumpstart the business. Fine. And quite often the angel investors actually remain on this part of the trade. They do not want to have their shares lodged into a company which has gone to the IPO level. So a lot of them demand exits as well. So if you sort of like offer up your company, then they can sell whatever shares they have in the company as well. Let's say they have a 20% share and the company is listed for an IPO. The investor can use this opportunity to exit with his assets intact. Secondly, when you go for an IPO and raise funds, it can be used to reward the employees. They can also buy shares as an incentive as well as reward. Some similar strategies are used to increase the work efficiencies in company. Lastly, it is also good for marketing purposes. Whenever a company holds its IPO, its name is flashed across all the stock exchanges, multiple newspapers, and so on. So there's publicity, and that benefits business. Coming to an example, let's say an established clothing company basically wants to expand and open a bunch of factories. Let's say it's a company from Gujarat and it wants to establish factory in West Bengal and stuff. It does not have enough money to buy the land or the construction material or to hire those workers to start working there. So what they do is they take some time, plan, enlist for an IPO, takes about 6 to 9 months, and then they end up raising $15 million dollars worth of money from selling their shares. So this is enough money to make those establishment, and now their business can like traverse across India. Something like this is what happens with a lot of other companies as well. Now, this is a part of some jargon. So before we continue with this slide, I like to ask you guys, does anyone here know what it means to like go bullish on a stock, or what does it mean for a market to be bullish? Anyone?
When the stock prices are
Raise
expected
the
to
price
go up,
of
it is
stock
called.
by creating artificial shortage.
Okay. So I understand. First of all, one of you just told ki when market is said to be bullish when the stock prices are increasing, and secondly, someone told about a strategy for artificially increasing prices and all. So yes, this is all associated with bullish nature. So to go bullish on a stock, being bullish on a particular stock or a share means purchasing or holding it rather than selling. This often actually leads to cause that the stock prices increases. And how exactly do you profit from that? Let's say if a share has a price X, a trader has bought it, and let's say sometime in the future, let's say 10 or 20 days later, its value doubles, rises to 2x, and an X amount of profit is hence availed. So right now you have those shares, and those shares have increased in the value. So your net worth has increased as well. Like we hear stories in our families all the time that this certain person bought like 100 shares of a particular company at 100 rupees per share, and now that share is worth 10,000 rupees, and he has made lakhs on that. So these things are not unheard of. So that is what happens when you hoard and the stock increases in value. Being bearish. So it is similar, but it is basically the other end of the spectrum. Being bearish on a stock is basically selling it rather than buying. For example, if a share price is X, you sell it and later the price drops to half. Fine. And then you buy it again. So what do you have now? You have the shares you all previously had, the same amount of share, and you also have X by 2 in liquid capital. So you have more than you already had, and you made profit even though that particular stock you owned is going down. So that is how stock market works. You can basically make money when a particular stock you own is going down as well as up. You just have to predict what happens next. That is the entire sort of concept. Basically predicting what happens and trying to benefit from it, making models and stuff. Now, coming over to technicality, the stock exchanges. So exchanges are the platforms which handle these transactions. When an IPO happens, a company gets listed on a particular exchange, and the platform where it gets traded, technically speaking, is an exchange as well. So India has two major exchanges. First of all, there's the National Stock Exchange, NSE, and it's basically the largest one in terms of, let's say, trade volume per se. More amount, more net worth of companies at certain point are being traded on that. And then there's the Bombay Stock Exchange. It is the oldest stock exchange in India. Before we continue, I'd like to ask one more question. If any of you knows about what Nifty is or what Sensex is, please go ahead and explain.
It is a portfolio of
A group of
stocks
companies.
which
50 is
are
the
selected.
50 companies, top 50 companies.
Yeah,
Top
perfect.
Top
So
50
performance.
companies of National Stock Exchange.
yeah, fine. So top Nifty is basically the top 50 companies on NSE, and top 30 on BSE are basically the Sensex. So first of all, some of you guys use the technical term of portfolio. For those of you not aware about this, let's say I have shares from 10 different companies. I bring them together. This is my portfolio of financial assets, like all of them combined. Fine. So a lot of people try to take a portfolio which minimizes risk. Like there's a company A which basically is in a certain line of business, and a company B which is maybe in some other line of business. So if the value of stock of A drops, the B stock is supposed to rise. So you can actually gain stability like this. This is basically all of this comes under portfolio optimization. The thing is, portfolio here just means that we are looking at these 50 companies together. And why do we look at the portfolio of these 50 companies together, the top 50 companies? Because it gives us an idea of the overall economy. Like if the top 50 companies are increasing in their share price, then we can say the market is doing good. On the other hand, if the opposite happens, we know that the market is in a slumber. So to get an overall idea and make strategies regarding how exactly to trade, you can do like that. And some people actually use the portfolio itself. It's like they'll buy the same stock which is there in Nifty. So there are all kinds of trading practices around these. So now let's switch to specifically trading. What trading even is? So at the very core, trading is just exchange of a commodity for something else. So whenever you get something, the buyer is supposed to compensate. Like you have to give out a compensation for whatever you're receiving, be it a product or a service. Here we are looking into stock trading versus money. So we are getting stocks and giving money, or we are selling stocks for money. So what happens is basically trading strategies are what makes every business or every trader tick. Fine. If a trader's trading strategy works, he can make money even when a particular stock is rising in value or dropping in value. If a businessman's strategies work, a successful business will make a lot of money. But quite often, as the meme suggests, that does not happen. Trading strategies or business plans do not always come true. So it's important to know how to make these strategies and test them. That's what we'll look into. Just a second. Yeah, so before we look into how exactly we trade, one of the popular techniques, algorithmic trading, I am going to teach a small mathematical concept to understand the examples in the next slide better. Moving averages. Let's say you have a series 100, 200, 300, 400, and so on. Let's say these are the prices of a particular stock. Fine. What exactly does it mean to take a moving average of a window 3? It basically means I'm going to take three values at a time, take their average and consider it. So what happens this way is, if you look at the averages across these durations, you get an idea if a particular stock is increasing in value, decreasing in value, and so on. So if we change the window size to 4, we'll have to take 4 points at once. That's all about moving averages. Now coming to the point, how exactly do we trade? The algorithmic trading concept. So what happens is, there's one way. You sit in your office, you look at these charts, you look at Sensex, Nifty, whatsoever, and decide for yourself which stock you're going to buy or sell. But quite often there is so much out there. There are so many different shares, stocks, companies. You will lose track. It's not feasible for a human being to do all those transactions correctly in a stipulated amount of time. So we use computer programs for them. We use computer programs to basically monitor and pull this off. So what happens is, this computer program will look at the previous data, like maybe the stock has been rising for this time, maybe a similar pattern was there in the previous economic recession or something, and try to predict using all of this information what happens to a particular stock, and then try to make deals. The software will either buy or sell. Whatever it is, the software will do it in an automated fashion without human interruption. That is algorithmic trading or automated trading. One particular strategy can be when a stock's 50-day moving average crosses above its 200-day moving average. So you can see that the current moving average is basically crossing the long time moving average. So currently the stock on an average appears to have higher values as compared to it had before. This is what this metric is supposed to say. Like, let's say the average you took in the 50 days, this day and the 50 days before this tends to be higher than the day and the 200 days before this. So we can obviously conclude that the recent values have been higher. So if something like this happens, we buy that stock, and when the opposite happens, we sell that stock. This is a very simple trading strategy. Fine. So we use strategies like this. There are much advanced strategies as well, strategies which use machine learning and so on. But this is a basic one, just for an example, to get a hang of what exactly algorithmic or automated trading is. Now we'll move on to the code demonstration. You all will be given a collab notebook, the same notebook that we'll be using, and you'll be asked to make a copy, and then the demonstration will continue. From here on, Shashwat will take over. Shashwat, are you there? Yep, Shashwat has shared the collab link. Go for the collab link Shashwat has shared. I have reacted to it. This is the notebook he'll be presenting for the code demonstration. Hmm.
Hello, I'm
Yeah,
audible.
Shashwat, you're audible.
Yeah,
I think there were some network issues earlier. Can you
yeah,
present or should I do it? Is the
yeah,
network fine now?
yeah, it's fine. So,
Cool.
hello
Go
everyone.
ahead.
My name is Shashwat Shashank, and I'm another Sophie and associate quant researcher at Quant Club. So, basically, I've shared a link with you guys in the chat box, and just raise your hands so that I can see how many of you that can access it and can present it. We will do a small task, right? Okay, I'm getting some hands here. Okay,
Yeah, just click on the link and open it.
yeah.
And if you can open it, just
Yeah,
raise your
just
hand.
click on the link and open it. Yeah, yeah. So, okay, I have got till now, I mean,
Around 40
20,
hands are up, I guess.
yeah,
Around 40
40
hands are up.
hands are up. Okay,
Yep, I
so,
think you can present
mm,
and
what,
continue. Yeah.
what yeah, so let me show you guys. So, is my screen visible to everyone?
Yes,
Yes.
Shashwat, it's visible.
Okay, so first of all, click on File and click Save a Copy in Drive so that one copy of this collab will be saved in your drive. Just wait for some time. It will automatically open a new tab name as copy of demo code. Does everyone did that? Yes or no?
Yes, yes.
Yes,
Yes.
yes, yes.
Okay.
Yes, we did.
So first
Can
of
you
all,
read?
we will install. Yeah. First of all, okay. Go to this. Go to that link. Click on File. Then click on Save a copy in Drive and click on it, so that this the copy of this collab notebook will be saved in your drive too. And then new tab will open and it will named as copy of demo code. I think everyone has opened till now. I'm assuming this. If anyone is still facing issue, please tell. Okay, then I'm assuming everyone has opened till now. So first we will install two packages. I mean two libraries. One is Backtrader and second is Yahoo Finance. Yahoo Finance in short is written as Y Finance. Okay, and just run it. Run on. Click on run. It will slowly install all the requirements that I need to be installed.
Sorry, where to click on?
Just click on this one, that play button. You will see that it started installing. Everyone did this. Everyone done with this part? Okay.
It is installing.
One small thing,
Okay.
if you don't have any doubt right now, please lower your hands. If you're having any issues with the collab notebook, only then keep your hands up. So we'll be able to help you. And if you have any such doubts, do write them in the chat ASAP. If not, please lower your hands.
And don't worry, it will install. Uh,
It is
then
showing
we
an
will
error.
uh, let it be. Let it be. Let it be. Okay. Uh, Next, we will import some of the packages. We will import Backtrader, date time, Yahoo Finance, and Matplotlib. Basically, Backtrader is a library that we use to do backtesting. Most of you thinking, what is backtesting? Well, backtesting is basically we test. Suppose we build a strategy and we want to check whether the strategy is going to give us profits or put our all of the money in vain. So what we will do, we will test our strategy with the previous set of data, and we will check whether we are earning or we are losing. Okay. And Yahoo Finance provides us the stocks data. So then run this one. Since all packages I have imported, let's go to implementation of strategy. So we will not not focus on this part very much, but yeah, so let me tell in short that this is like moving average. This is known as RSI strategy. We will implement it on Google stocks data from January 1, 2019 to December 31, 2020. And I've also written that we will buy the stock whenever RSI value will go below 30 and sell it when it will be above 30. So run this cell. Next, go down. You all are followed me till this part, no? Or is there an issue? Okay. I'm assuming then no issues with it. So let me explain some of the parts here. Well, we'll not be presenting actual money, but yeah, we may show that we have currently 1 lakh as principal. You can see here. This is our initial portfolio size. In short, in easier way, assume we have 1 lakh as principal, and who all knows that whenever we buy or sell, we have to pay commission to the broker. You know now, whenever we buy or sell, we have to, even if you don't know,
Yes.
whenever we buy or sell, we have to pay commission to the broker. So I have set the commission to be 0.1%, and it will print firstly the initial
Your voice is
portfolio
breaking.
value or our initial size, which is good. Okay, just give me a sec. Is it fine now?
Yes.
Is
Yes.
it fine now? Yeah. Okay. And then after the initial portfolio value, we will run our strategy, and finally we will get the value and print our final portfolio value or final principal. Okay. Then we will find the profit to see how exactly the strategy is working. So just here and click on run and let it slowly run. And you can see now that our initial portfolio value was 1 lakh, as told. And then depending upon the situations, you see that the computer is automatically creating the sell or buy, and is buying or selling the stock, and it is paying the commission as per this. When we go down slowly, we can see that the final portfolio value is 1,26,849. Our profit is 26.84%. Let's to be approximately 27%. Now you can see in the graph that the red one depicts the sell, means here the value is above 70, RSI value is above 70, whereas green one it's the value where RSI value is below 30. And you can see the volume, how much it has been traded, and the net profit. So this is how algo trading works. Though this is a basic demonstration, we have implemented only one strategy here. We can implement multiple strategies also to maximize the profit depending upon our convenience. Uh, till now, is anyone having issue? Because we are moving again to the slide. If anyone is having any issue with the code, please tell.
So I no, not an issue with the code, but I was asking like, is it almost similar to the stock market?
We are using the exact stock market data
Okay.
of the
Okay, one
Google
question.
stock. Yeah.
This Yahoo Finance that we imported the package, like this information we get from outside or is there already in the Python, this thing?
Yahoo Finance is an API. What we get is a real time data. So that's if you So, I mean, I hope you get my point, right? Whatever
Yeah.
we are getting is a real-time data. Okay, so if
So
all the
are we
doubts are
linking
clear,
basically, right?
yeah,
So we are linking the website of Yahoo Finance to the to the Python
yeah,
thing at
yeah,
running time.
yeah. Are we having any more questions?
Will it take the Indian stocks live data also?
Yeah, yeah. Yahoo Finance provides every data. Like, suppose I want to change this from google.csv to anything else. I want to import any other stock. Let's go. Actually, let me show you guys what exactly Yahoo Finance is. Right. So suppose we go to Yahoo Finance, finance.yahoo.com. So it provides me with each and every data. You can see it is providing me gold also data. I mean current prices at which gold is getting sold. Let's suppose you want to know about the Indian stock data. Let's suppose Tata. Okay. You can see Tata Motors, Tata Consultancy. These all are Indian company, but these data are also present here. So Yahoo Finance provides us with everything. Does that answer your question? Whoever asked?
Yes.
I
Thank you.
mean, I suppose that it's a yes. Okay, okay, okay then. So, is there any question or should I move on to the slides? Okay, then I'm moving on to the slides then. So, since the code demonstration is done, hmm, is my slide visible? Is my slide
No.
visible? The
No.
slide is
Or
not
not
visible.
yet, Shashwat. I think it's lagging. Or I just wait for a few seconds. It will be visible soon.
Okay.
Now it is visible.
Yep, it's visible now. Go ahead, please.
Okay. So yeah, since the boy was asking about show me the money, we showed him the money. We showed him profit also. So we can move on next. So next question is what even is quantitative finance? Well, basically you know, I mean you came to know about what is quants. Let's move on to what is quantitative finance. Basically, it is a branch of mathematical finance that uses and analyzes mathematical models and on extremely large data sets to analyze the financial markets and securities. For example, pricing of derivative securities, about their risk management as well as portfolio management, and whereas the professionals who work in these fields are known as quants. It involves basically of three things. Maths. Firstly, it involves a lot of maths using mathematical analysis on financial aspect, though it is a broad term. In short, to analyze, to tell that it involves props and stats a lot. It involves stochastic processes and a lot of things. Modeling, then it also involves a lot of mathematical modeling of the aspects, like when I showed you about the strategies and all. And lastly, and most importantly, after the analysis and modeling both are done, now our model can predict and how to sell and buy. The remaining the trend of the market, we are going to make profits. Moving next, the domains of quantitative finance. Firstly is finance, of course. The quantitative finance itself contain the word finance. Second is time series. Third is ML, that is machine learning. Fourth is DA, and fifth, and I consider it the most important two, that is probability and statistics. Moving on next. Looks like our Chandler friend told that he has learned a lot today. So he currently now knows where and how to invest, and he is thanking us. And moreover, he telling you guys that he have got to get to work, so he will be get going. So let's greet him by. Then moving on next, who are we? we proudly announce that we are the quants of KGP. Investopedia describes us quants or us as rocket scientists of Wall Street, but we describe ourselves as a group of quant enthusiasts. What we do. The internal activities inside us involves knowledge meets. First of all, we do a lot of knowledge meets in which we teach you guys how, when, and where the strategies are implemented, how the strategies are built, and a lot of things about quantitative finance, about ML, about DA, and what all are required for the quantitative finance and quants. We do write and backtest a lot of strategies. Like one I showed you, though that was a basic example. The real one we do involves a lot of complex strategies and a lot of predictions and lot of amazing stuffs. We do implement a lot of research papers and come to know, implementing research paper, you come to know about a lot of new things. White paper session is the one session that after teaching you guys, we will be giving you the freedom to choose any one topic and present it to us, that what you have learned from that topic as well as from us, and how do you present it to us. We do involve a lot of fun games and activities. We play together, we go to parties together, we even work together till late night, and we do involve a lot of cool programming projects. Our vision basically to build a strong quant culture in the fellow KGPMs, to increase the awareness of quantitative finance as a viable career option among the student community, and importantly, to promote and raise awareness about various resources and opportunities related to quantitative finance. Moving on next, I think my friend Shri Krishna will take over from here. We do have few and you may find helpful. Shri Krishna,
Hello guys.
I think you can take over from here.
Okay. Just I'm here to make some announcements for you. So here, like we have planned the summer of Quant, including workshops and projects for the students of IIT KGP for next 2 weeks. Okay. First of all, including that in that, like from 27th to 29th of May, we will be having fresher workshops, and like they are curated for you only. In that, we will teach some finance, stock market stuff, technical analysis, and fundamental analysis. These are like kind of basics stuff which is like required to get started with the quant or algo trading. Then we will have some quant projects in the first week of June, and we will be having this projects in 3 divisions basically. Uh, these ones are not only curated for the freshers, but seniors to freshers also can join, right? And then you can select any division like 1 or 2 or 3. It's all 3. Yes, there are 3 divisions, right? So amongst them, you can choose any number of them and to work on and complete those projects. Regarding that, like we will having mentoring workshops that time. And in case you face any difficulties while coding those projects, वगैरह, then we will be available for you. So we encourage freshers to try these projects even if they are new to this field, so that they'll get exposure. And like those 3 strategies are basic divisions are basically strategies, time series, and portfolio optimization. These words might be new for you, but don't worry, we'll tell prerequisites for that, and then the rest of that we will teach you in mentoring workshops, right? Then prerequisites for the fresher workshops and quant projects are Python and their libraries basically. Okay, we have, I guess we have shared that resources through our page. You can have a look there. Okay, after that, let's talk about fresher selections. I guess you all getting now about that, right? So it will be having 3 rounds: quiz round, coding round, and interviews. They'll get started roughly around 5 or 6th of June. Okay, in this selections, you will be tested upon your analytical skills and understanding skills, reading skills might be, and then prerequisites for fresher selections are Python and libraries only. That also you'll get in that document we have shared through our post. Okay, you can have a look there. I must point to some. I must pin some points here for the freshers, especially. Like ML is not prerequisite for freshers workshop or freshers selection. So if you are not familiar with ML, then like, don't fear out. Okay, just Python, Pandas, NumPy, and Matplotlib is enough. And suppose like you are new to Python, then trust me, learning Python will not take as much as it takes for C or C++. So like there is enough time for you to catch the fresher workshops and selections as well. So, and suppose like you are facing any related any difficulties regarding that, like Python, Pandas, NumPy, Matplotlib, or any other query, you can drop your message on our Facebook page, right? So we will help you out there. And schedules for the summer of Quant, fresher selections, and the post related to that will be shared through our page soon. If you have any doubts regarding that, you can ask any question.
So, is your page like only on Facebook or on LinkedIn as well?
Our LinkedIn is right now not that much active because like all work that we are doing right now is institutional and centric and internal work. So it's not that much active, but you will get everything on our Facebook page.
And means is it like mandatory to learn Python for the selection?
Yeah, could you come up again?
Like, is it mandatory to use Python for the selection, or we can use other languages as well?
You can use Python or C++, but like it's kind of easy in in Python. Like that's why I'm saying you can use Python, and there is enough time.
And
Right? Means
and
learning.
moreover, Python is having a wide approach. So whenever like Python is not only beneficial here, Python you can find
Means Python is basically very easy language. Like you can get hands on that on just 3 to 4 days. Like means like to get started with C++ on such some medium level, you'll require time, right? But on for Python, you'll not require that much time. Like 3 to 4 days are enough.
In Python, till what we have to learn Python?
For Python, like especially, see, we have I already mentioned that we have shared the resources on Facebook page, right? Still, like if you want to know, then like basic of Python, then for loops, if loop, if else loops, then for while, then basic objective oriented programming, that kind of things are enough for fresher selection. And I guess for that, and also Python library is also a mandatory like Matplotlib and all that.
Yeah, so
Pandas and
it's mostly this like basic Python you're supposed to know and a basic idea about the libraries because a lot of times you will not know a library of the API of a particular library that you're using. So you'll have to Google it. You're just supposed to be able to construct the logic and write most of it in Python, like the very basics.
And so I was asking like certain times I have seen on YouTube and all that day traders make a lot of money out of it. So,
Mhm.
but according to what has been shown, it's like 26%. So how is it possible that they make a lot?
what I told you must have got that this was a very
it's not
basic strat.
anything like
Okay,
that. Means
what day
technical
traders
analysis
do,
really depends on skills.
yeah,
Like
they
means if someone is like very skillful and like experienced in technical analysis, then one can make money. But of course, like most of the like, uh, but there is like another kind of thing like large, like long-term investments and this trading investment. Sorry, trading is not investment, but short-term trading is like it's just it's totally mathematics dependent. So it's not that like it's depending. Sometimes
Yeah.
it depends on it fundamentals of the company. Like if you are filtering out the portfolio and then, but it's not anything like that. You can prefer any strategy or like most of the bonds are like go with the combination of the strategies. Like
No,
there's
I'm just asking like suppose I have X amount of money and I
uh,
invest it every month for 12 months and I kind of day trade for like I try to invest at a point such that I get over 1% return each day, and that would make a hell lot of money. So is that possible?
Uh, Believe me, I
It's
have done.
highly
Depends. It
the you
depends
need to
how skillful
understand.
you are.
Yeah, you need to understand the situation is volatile. All the companies change. So to make money, there are a lot of factors how to keep in mind. How are the companies like sort of as someone suggested, like there's a lot of sentiments going on as well, and you have to be good at the technical analysis, the mathematical analysis, and everything. If you're skilled, if you're focused, and if you're sort of someone who keeps in mind all of these things, yes, you can make a lot of money in significant periods of time. Quite a lot of money can be accumulated this way, but as we all know, like that needs a very good amount of skill. So when the amount of skills you have gets reduced by a little bit, the luck plays a bigger role in that. Fine. And so there's a chance you can end up losing as well, because let's say you did not keep in mind a certain factor while trading, and it ended up causing a lossful trade, something like that. I hope you understand.
But of course, like what you are saying is like daily 1%. Like, I have tried that, but it's practically impossible. Means like on every day you are making 1% profit. Okay, the thing is like what you can do. But of course, like you, if you want to make large investments, then like sorry, large amount of profits, then yeah, means for the long term, then investments are better. But if you're looking for like you want to earn, like good amount of money in just by doing technical analysis, that's also possible. But just the skills are required.
Okay.
And regarding Sri Krishna, we are having some questions in the chats too, that how they are going to register for the workshop and all.
I already mentioned that for the fresher selections and for the fresher workshops and summer of Quant, we will be sharing our post soon, so you can register there. There is an address.
So are there any more questions?
Where can we find the um, Python materials? Means you mentioned that pandas.
They're on the page. We have like given you reference material on the Facebook page.
We have shared them through the Facebook page. You can just go there. Today only, like before 30 minutes, we have shared earlier.
If someone doesn't belong to computer science or mathematics branch, can that a person get internships and make a career in this field?
Yes, there's a Quant Club senior itself. I think Krishnam is from electronics, right?
Krishna.
Yeah,
Yeah,
Krishnam.
Krishna is from
Yeah, he's in
electronics.
Quad I right now, HFT, and yes, he's doing very well there.
Is it limited to circuital branches?
No, no, no. It's not like that.
Uh,
Like
where is the post? Couldn't able to see it.
Facebook page, recent page. Where are you checking on laptop or mobile?
Laptop, Quant
Yeah.
Club 80 kgp.
So on laptop, the first post must be
Okay,
pinned.
okay, okay,
Uh,
got it.
Post you should check.
Thank you.
So like this algo trading is the way to high frequency trading jobs, or it is different, or I'm interpreting
I
wrong.
mean, yeah, so the thing is, you have to write trading algorithms as a part of those jobs, but a lot of times, a bunch of other things are involved in the selection process, if that's what you're asking. Like, that's not the only thing that you need to be good at for selection in those jobs in CDC or something.
In fact, when you will be sitting, then you will be realize that mostly they will require from you
Hmm.
is props and stats.
Yeah.
Props and stats, that's why I told is one of the important topic of maths.
So it's the same strategies are used by like Jim Simmons and all others for making this money.
Sorry, your voice came very feeble. Can
Yeah.
you please repeat?
Your voice broke, man. Can you just repeat the question, please?
Okay. So I wanted to ask that the strategies that are developed by Quant Club develop strategies like uh, Jim Simmons is developing for their firms.
I am not aware about the technology stack of Jim. Was that a general question? I think I again did not understand.
Okay, so I wanted to ask at Quant Club, do we develop strategies?
Yes, yes. A lot. The most of the specific work that we do is experimenting with strategies. So how it happens is most of the good strategies before coming to the market are actually researched by mathematics and statistics professors and researchers and published as research papers. We pick up research papers, implement strategies, and try to improvise them to sort of do better. And the same is tested on backtesting platforms like Backtrader using real-time Yahoo Finance data. And apart from that, to sort of test custom strategies, we are also on our way to building our own trading and backtesting platform. It's like underway right now.
And who is known as an investment banker?
Investment banker is someone whose job is basically taking up money from particular investors and then investing it and basically making more money out of it. I
So
think
he's
that's
like a broker.
No, no.
not exactly. Not a broker is somewhat different. Broker is someone who gives you a particular platform, you use them and give them compensation, that sort of thing. Uh, Investment banking is something which is very much related to quantitative finance, but that is not the sort of thing we are discussing right now. We are right now on more strategy oriented. It's like you make an investment and then you do it. Investment and trading are not exactly the same things.
Like investment banker is means like professional in the like investment banks. Like they provide financial services on the sales side. So suppose like there is one company who wants to get publish like they want to get listed on the stock market. Okay? So they approach basically this investment banks like who are uh, like very good at analyzing the value of the company and etc. All things. It's basically core finance stuff, and like then do that they do this
It's a
valuation
very broad term.
to value the company, and then they sell the shares of the there on the exchange. That's the thing.
Yep, they help when companies go for IPO. Yes, that's one of their
Yes,
jobs.
And yeah, please don't mix core finance with quantitative finance.
Yep.
it's
Okay.
different.
And does the Quant Club also deal with blockchain and cryptocurrency?
Yeah, that might be the case. Means that see, there is also technical analysis in there. There can be the strategies which we can use in crypto and वगैरह. So of course, means Quant Club welcomes the crypto concept, and that's fine for us. And we
In
work.
fact, we in recently we do have holded a white paper session on crypto too. So yeah, we deal with it.
And what about forex trading?
Forex trading is just it's opportunity. So like if it's about the finding opportunities in the financial markets, uh, it's about forex trading is more about it's first finding opportunities and then applying the strategies that we use. So it's also part of financial markets. So yeah, quantitative finance. Like of course about then if it comes to commodities, then also we like quant have a role in it. If it comes to derivatives, quant have a role in it. That's it. Quiz round will be related to puzzles or finance questions, probability questions, like probability up to 12th. Yeah, this kind of stuff.
So is it possible for someone who has like very less knowledge about markets to get selected in the quant club?
We just require an enthusiasm, nothing else.
Like,
If that,
is there,
Like
there will be freshers workshops, right? So we will teach uh, basic finance stuff there, right? And then in selections, like you will be provided with means for quiz round, we will take quiz, that does not require too much knowledge of finance. Then for the coding round, we have already shared the prerequisites. And then the last one is interview round. That like if you will be able to, uh, do the coding round well, then you'll be able to crack the interview as well.
actually means Python is not that much difficult. So like probability and statistics of up to 12th is enough, and Python.
Means by now for fresher selection, it's enough. Uh,
After that, obviously we have to
so
scale up.
it's like there will be a course in your second year anyway.
Okay.
In the resources shared on the Facebook page, do we have to cover machine learning parts?
See, means if you are able to cover the Python and library stuff, then you can go on the ML part, but it's not required for the fresher selection and not for fresher workshops either. For projects, if you are saying, then there are three divisions, right? So in portfolio and in portfolio optimization and strategies, you'll not be required. You'll not be requiring ML, but yeah, for time series, little bit, very little bit. But that also you should not be worried about because for projects, like we will teach stuff in it. But for fresher selections, ML is not required. I already mentioned those points, right? Wait, I'll just point out that message. Means I'll share one message here after the workshop gets over. Sorry, after the session gets over, I'll just post one message. You can have a look at there. Like, means you have to keep those points in mind. Any more doubts?
Okay, I have a doubt. Like it's not about selection; it's just about the trading one.
Uh-huh.
Like whatever strategy gets tested, okay, it's a very good strategy, like RSI or let's say MACD. It all gets linked to the like the brokerage apps. Like we have angel investing or the other one, like Zerodha and all. So like how many times do we need to test a strategy till we can employ it in the actual software for people to, act on it?
Okay. So see, there are like basically two types. Means what are you asking? Come up again.
Like any strategy,
The last part.
we got a strategy tool and we wanted to get it employed in a software where public can use it, like Zerodha or something. But then it has to be a very good software, like very good strategy. So how long will we test it?
Means is it new or like is it used one strategy?
Strategies are getting invented every day, right? In the firms, like every firm tries to bring new and new strategies based on mathematics and finance. So
I'm not really sure about like how it get deployed on the Zerodha. There must be some criteria or some like checking regarding the mathematics background beyond that behind that strategy or like its financial its historical profits that it has made or something like that. There must be some conditions, but like there are two types of strategy. One where is there is not some variables which gets optimized, and there is one where you have to optimize the variables. So basically that completely depends on data. So what you have analyzed on. So I'm really not sure about like how it get deployed on Zerodha.
And what about the brokerage fee? Like, is it always 0.1% or somewhat more than that?
Like there are different types of like different brokerage fees for different type of investments. For derivatives, like you have other type of different investment brokerage, such as premiums, वगैरह. Then, like if you are just talking about equity, then there will be 4 to 5 divisions of brokerage, such as like if you are dealing with the trading before settlement, means like just you are buying and selling it before it gets settled, then you don't have to pay the DP, that is depository participant charges. That is like 15 rupees on Zerodha, and nearly 15 rupees on Zerodha for one company. Then there are this brokerage, like for the most of the brokers right now, you will not have to pay for buying the stocks, but if you are selling those in the like before the settlement, then you'll have to pay 0.03, I guess 0.03%.
So the basic is like, if I do day trading, so I don't have to pay that 15 rupees.
You don't have to pay that 15 rupees.
Okay, okay, okay.
But you will have to pay brokerage charges. And regarding and also there is tax. Okay, like there are SEBI charges, and there are also tax. But it comes in slabs. So like as long as I guess it's 2.5 lakhs or 5 lakhs something. Above that they apply some high taxes, and there are also like LTCG and STCG, like short-term capital gain, and LTCG long-term capital gain. Here term is like of 1 year. So if you are like dealing with the investments which are over 1 year, then you'll have to pay less, that kind of stuff.
I mean the taxation. I know that the brokerage fees is calculated on the net sum of money, but the taxation is done only on the profits, right?
Yeah.
Okay, okay.
Okay, guys, I think let's wrap up soon. I mean, we will raise one more question asked by Aditya Krishnadas. Will there be any group discussion round for the fresher selection?
We are not consultancy group. Like
Okay.
if you have
So
any, then you can post on our Facebook page. Okay.
Okay, so please remain my synced with our Facebook page. We will be uploading all our updates there. And till then, thank you guys for coming.
Can I get the link of the Facebook page, please?
I guess someone has shared already, right? Pratham has shared in the chat only. Like if you if you are using it on a laptop, then you'll see 2 posts. One of them is pinned. Okay, so don't see that one. Check the timing that we have shared, on which we have shared. It should be recent.